My team and I believe that the money part, the money step in buying real estate is the most important step in buying a home because it answers so many questions for the buyer. This again, our goal here is to reduce the anxiety, reduce the information overwhelm, reduce the roller coaster of emotions that are usually tied into buying a house. And knowing the money step actually eliminates so many of the, or let's eliminate so much of that drama for us, right? And so what I'm gonna do now is I'm gonna go through the three steps of the money step, okay? We'll break it down and let's go ahead and take away the smiley face here and reveal to you, whoops, don't want that to fall. All right. The three things that we were going to want to find out is the loan or funds, down payment and closing costs, and three are your monthly payments or monthly expenses, I should say. Now, does if even if you do pay for your house with cash, you'll still have monthly expenses, right? And so don't let that mislead you into thinking just because you pay for your house with cash that you're not going to have monthly expenses. So monthly expenses, the first thing I would think about would definitely be your real estate taxes. So real estate taxes are monthly or annual dues that are on your real estate. And so that is one thing that you definitely want to account for. But I'm kind of jumping steps here. So let's go to loan and funds, okay? So like I said, if you have enough funds to actually cover the entire purchase amount of your house, that's great. You know, a big majority of home buyers right now, I would say anywhere from 90 to 95%, still rely on a loan. And what that would mean is that the two types of loans where most mortgages fall into are actually the government loans and a conventional loan. And so conventional loans are just like that, you know, just they're called conventional loans because these are funds that are being lent out by a lot of the major institutions, banking institutions that lend out money for mortgages, right? So whether they're like your Bank of America's, your Wells Fargo's, your Boeing employees credit unions, your local credit unions, which we have a lot of here in Seattle. You know, the majority of the loans are going to fall somewhere in that category. And, you know, the government loans, you know, which are your Fannie and Freddie, your FHA loans, you have your state bond loans, and you have your VA loans for our veterans, right? Shout out to our veterans. Those would be considered government loans. And so this step, I cannot stress enough the importance of actually speaking with a professional and competent lender because your lender or our lender that we're going to be working with, we are going to be partnering up with making sure that the entire process of you buying and owning your home is as smooth as possible. And so we want to uncover a lot of these unknowns up front. You know, I would say even before going out and taking a look at houses, because, you know, let's pretend for a second that, you know, you and your loved ones, you and your family, if you have kids, you know, you and your kids go out and you're really excited. You know, you're driving around the neighborhoods and then you happen to see a new house for sale in that neighborhood, and you know it happens to be a weekend, and so they're actually having an open house of that weekend. And so you walk in, you park at the front of the house, and then you see the grand vision of how the house looks like. You're getting all excited and you're getting all emotional about it, right? And long story short, you know, you start investing emotionally into that house, okay? But you're not quite sure, how the financial picture is quite yet for now. And it's okay, to suspend that for just momentarily so we can kind of get into the feeling of dreaming and feeling the possibility and imagining what it would be like living in that house, okay? What gets a lot of buyers into sort of like a bind with their loved ones is when they get too invested and they get too emotionally attached to a house without knowing the financial part. And this is why I discourage some of my buyers or some of my clients, which, I don't have a hard and fast rule about, but I can tell you every time I don't follow this cardinal rule of mine, it always spells frustration. It always spells disappointment. It always spells shattered dreams for them, okay? And I need to do a better job of actually making sure and telling them that we should refrain from looking at houses first before we actually have the financial information at hand, right? This happened to me recently. When one of my clients was really excited about buying a resort home, and it's going to be their second house, sort of like a vacation home, Airbnb, and their partners haven't really figured out the financial aspect of purchasing the property. And so when we found out that there's not really a whole lot of time in between the weekend or the week that the house actually jumps on the market until the offer review date, it really sort of how should I put it? It almost took the wind out of our sails, right? All of that forward momentum, all of that excitement, all of this good positive energy that we're working towards, the goal that we're trying to find, it was sort of like dampened, because we didn't know how we were going to move forward with the purchase of the property. And so what gets me more is when I am not there to facilitate that process, because imagine for a second, you or your significant other, you're looking at a house and you're starting to imagine things. We can't help it, right? I mean, we can't help it. It's not something that we could just stop, right? Because we are creatures of imagination. That's how we actually take a look and navigate throughout space and time. And so when you're looking at a house where it's not really clear how you're going to move forward with that yet, you sort of make a lot of promises to yourself that you or your significant other may not be able to fulfill. And so that's why the disappointment that a lot of people feel, after finding out what their situation is, it could be really discouraging, or it could be discouraging. It could literally stop you from taking the right steps in order to start building your wealth, or start buying a house. And so that's why I would highly, highly, highly recommend and highly encourage you, my buyers, my clients, my friends, if you're thinking about buying a house, refrain from going to open houses or really getting into the sticks, or getting your feet in the mud, so to speak, of trying to look for a house. Okay, so I think you kind of get the idea, right? So once we get those figures, once we get those numbers in our head, and we start to feel comfortable with knowing that this is what we're actually going to be dealing with. You know, it's really exciting to start to buy a house, but the monthly fees, the mortgage that you're going to be paying on the property, I mean, it could be a lifelong commitment, you know, and you know it could really change your life on a really fundamental level, and so you wanna have a lot of clarity around this topic right here. Okay, you want to figure out what your down payment is going to be, right? Most loans right now, they require around 3.5% of the purchase price of a house. Although, because we are in a really competitive market, what we see is that a lot of buyers are actually willing to sometimes double, triple, quadruple, quintuple that amount. So it's not rare for you to see that there are some buyers out there who are putting down 10%, sometimes even 20% or more towards the purchase price or their offer price on the property, right? Something that we'll get into later on as well is the higher the down payment that you put down on a property, sometimes the lower the interest rate that you get. And at 20%, if you put 20% down on your house that you're going to be purchasing, you also eliminate what we call PMI, or primary mortgage insurance. So primary mortgage insurance, it could be anywhere from a 10 to 15% premium of your mortgage amount per month, which could actually, what it does is that it actually steps in if for some reason you're not able to continue with your monthly payments. You know, knock on wood, whether that's, you know, some family member losing their job or through sickness or whatnot. I'm not an insurance agent, so you know, I can't tell you all of the terms that are included in a PMI, but we do work with our lenders, our lender partners, who could actually do a deeper dive of that information with you. But in essence, you know, PMI, it's quite a bit. You know, it's a pretty big chunk of your mortgage payments and your monthly payments. And you know, especially if you're planning on staying, you know, in your house, and you know you want to be responsible, you want to be a good, responsible homeowner, you're gonna more than likely keep on paying for your monthly payments and your mortgage payments on time, right? So, and on top of that, PMI, that's probably something that you could put or you could use for something else, you know, whether it's a higher yield investment that you would like, or you know, for your loved ones, whatever it could be, you know, for your loved ones, you know, whatever it could be, like I said. So down payment and closing costs is another thing that you would like to know. Closing costs is what you would actually pay for in order to close the loan. And a lot of people mistake closing costs to just mean lender fees. But the reality is that in closing costs, there's things such as excise tax, escrow, title and escrow fees that you have with that. There's also your prepaids for your utilities, especially, I mean, if you're going to be moving in somewhere in between the middle of the month. And so closing costs could be anywhere from 2 to 2.5% of the purchase price. So you want to be able to prepare for that as well. Now, luckily, I do have lender partners that are able to cover some or most of your down payment and closing costs. And so right now there is a program out there that would actually allow you up to 3.5% of your down payment to be given to you as a grant which means that you don't have to pay it back, and 2% for your closing costs. And obviously there are income requirements and income limits to that, and it is a first come first serve type of grant. But if you are interested in moving forward with a program like this, please feel free to message me, email me, text message me, call me, what have you. I'd be more than happy to introduce you to my lender extraordinaire, who actually is able to offer this for first-time home buyers. So that's it for the money section. I think I went over a lot of things in the money section. But if you have any questions whatsoever, feel free to leave it in the comments. DM me, text message me, email me, what have you. But generally speaking, the money section, the most important thing, okay? Actually, as a bonus, before I wrap this video up, I kind of want to talk about some of the elements that are involved in the loan. So one of them is definitely going to be your FICO score. So generally, there's 3 types of scores. You have your so FICO is going to be your Equifax, right? And then you're going to have your Experian score, right? And then your TransUnion. Okay, so these are just credit bureaus that actually keep track of consumers' credit score. Okay, and what you want to look out for, and I believe, my lender could definitely do a deeper dive on this, but so far as credit scores go, they actually look at the mid. So let's just say, like, so there's low, medium, and high. What they do is that they actually give you a mortgage based on the median score between the 3 of them. Okay, so anyways, talk too much about that. What you're going to want to look for is you want to be able to have a credit score of anywhere from 620, okay, to 640 or 700 FICO. Okay, now the way these break down is that, generally speaking, in order for you to be able to have the most ideal terms for your loan, you're going to want to have at least a 620 score. I know of some people getting approved for mortgages with less, but I believe that it makes sense that if you have at least a 620 score, you'd be able to buy a house. Okay, now some car companies require more in order for you to buy a car, which is amazing, and that's why at 620 you could be a homeowner. That's reinforcing what I told you guys about anybody being able to buy a house. Okay, so it's democratizing the wealth building process. Anyways, so 620, that is the score that you would need in order to qualify for an FHA loan or VA, which are your government loans. Okay, 640 is the minimum required for a conventional loan. Okay, so obviously with FHA and VA loans, they are a little bit more lenient when it comes to the credit score, but when it comes to the condition of the property, they're a little bit more strict. It's not a whole lot more different, but compared to a conventional loan of 640, yes, they may require slightly higher score and better credit history, but usually they're a little bit more lenient on the condition of the property. Now, remember I was telling you about there was a grant that would give you down payment assistance that you wouldn't have to pay back. The other good thing about this loan is that it's a conventional loan, but it has requirements for a government loan. So that's another advantage there for you guys if you want to move forward with that with me. Okay. Finally, The third type of loan that we have is what is called a jumbo loan, and a jumbo loan is past a certain amount. I believe in King County, it's around 710 right now, $710,000. Don't quote me on that because it does change all the time. But majority of our buyers are going to be somewhere within this range. Okay. And the other thing that you're going to want is at least 2 years of job history. Okay. Job history. Okay. Well, Teddy, what if, I'm not doing, or if I have a sideline, let's say, I'm part of the gig economy, right? Those would be considered income as well. And, again, this reinforces the importance of having a great lender to talk to, because they'll get to answer all of these questions for you, package your